Today I'm going to show you guys a little, well, definitely another lesson for today of kind of how to hold on to hopefully a trending indicator. Um, and I was trying to find the original indicator that the customer is using, but I couldn't get it to behave the way I want it to. So I'm just going to use the stochastic as an example because it looks pretty good here. So, all right, let me take a look at some of the comments and questions. And good morning to all you guys. Let's see. Let's see, Tony. All right. So yeah, Tony. If I do have some time, Tony's been and probably this is probably pretty common. So Tony's been trying to get a handle on synchronizing a higher time frame chart to a lower time frame chart, and so I will try and address that today, Tony, if time permits. So, all right, with that, guys, thanks for all the greetings there, and we'll jump right to it. So the conditions are essentially, wrong one. We want to mark we want to mark a short condition here. Once your indicator crosses a threshold level, in this case on the stochastics it's the 80. So we want to hold on to a short trending kind of condition, basically a short bias until until the stochastics comes down here and then crosses above our 20 here, and then we want to hold on to a long bias. However, as you can see, that sometimes what happens is our indicator, in this case the stochastics, will reverse in this kind of no man's land, right? So between the 20 and the 80, right, is kind of this no man's land where there is nothing being triggered, right? So this is kind of marking our no man's land here. And so in this case, what happens is we kind of got this little fake out where our indicator is saying, oh, now we should go into a long condition. And so, if we toggled into this long bias, well, what's happening to price? Price is continuing to trend down up here, and of course our stochastic reverses on us and goes back down. And and so when we get these change in directions of our indicator in this no man's land here, we want to change the bias. So when we get this inflection point here, we want to change our bias. And but we only want to change the bias when we're in this no man's land, right? So for example, sometimes, let's take a look over here, right? So we wouldn't want the inflection point. Let me mark this inflection point here. So if we created a solver looking for these inflection points, it would work great right here, but we don't want the inflection points, to be triggered right here, because we're still above this overbought area. We're above our threshold here, right? And we wouldn't want the inflection solver to trigger right there either. That would be too soon. So we need these reversal points. We only want to allow the reversal points to occur in our no man's land kind of area. So, so that's what I'm going to build for you guys today. And then after that, I will tackle Tony's Tony's issue with synchronizing a higher time frame chart with a lower time frame chart. All right, so we have BloodHound down here on the chart, and so first thing I'll need to do is I will need to provide a name for our template, so it saves it. So I'm going to use our default template name. All right, there we go, training workshop. Oh, this template here got put in the wrong directory. So you know, it can be kind of confusing on our website, as most of you know, right? I have BloodHound template files, and then I also have the chart template files as well, and they're named both the same. So that way, you know, if you load the chart template file, you'll know what BloodHound template file corresponds with it. And so what I do to differentiate the two is I put the word chart in the file name. So actually this template file actually belongs over in the chart folder. There we go. So as we look in the chart folder, you'll see, let's see, let me scroll down here. Yeah, so all these training workshops have the word chart in them. So that way you know it's a chart template file, because they all have the same extension here. They all have an XML extension. All right, so let me find the last one. There's our last workshop file. Add 7 days to it. All right. So the way I'm going to build this is I'm going to use 2 different crossover solvers. So I'm going to use one for our indicator crossing the 80, and another crossover solver for the indicator crossing above the 20 to kind of start us off. And this is going to require some function nodes. So I'm going to go ahead and start working straight on the logic board. So let's drop a couple of crossover solvers on here. And when I'm putting together a new solver, I always like to connect it to my result node, so that way I can see the effects on the chart immediately and make sure that I'm getting my solver set up correctly and making sure that, you know, the behavior is what I want out of this solver. All right, so let me, first of all, I sped up the stochastic so it has the kind of pattern, the pattern that I want. So I'm trying to find a pattern where the indicator doesn't switch back and forth very often. You know, I'm trying to eliminate these reversal points in this no man's land as much as possible. So I sped up the stochastics to do that. So 373. All right. So we'll go find the stochastics. All right, we're using the D. Okay, so instantly I can see I'm getting my crossover signals here. And so I'm not interested in this long cross up. I'm only interested in this short cross down. So I will just simply isolate it to the shorts there. And let me give this a name here, a stow 80, and it's a cross down. So now as I look here, and I must not have the solver matching what I have on the chart. Let's see. 373. Oh, I forgot to set my indicator B. All right, so and I'm looking for it to cross an absolute value, right? So these thresholds, this 80 and 20 threshold, is an absolute value because it never changes. So I'm looking to cross the 80. There we go. That looks better. Crosses the 80, crosses the 80, and down, so forth. All right, so I'll set this one up. And let me connect this in here. And I'll put the stochastics in. And once again, I'm only interested in the D plot. And I need to set this to an absolute value as well. This will be looking to cross the 20 threshold value. And there we go. So there's our crosses down and crosses ups. So I need to remove the short cross downs. So I'll set the evaluate to longs only. Okay, great. So just for example, this isn't so now I join both together with an OR node, and there we go. So we got our short cross downs and our long cross ups, and what we need to do is originally, so this is, we want to change these crossovers to a long and short bias for our system, right? So I've seen that a number of you guys have some indicator that you use for this kind of purpose, not necessarily the stochastics, but I've seen, where I got this concept, the customer was using the RSI, but for some reason I couldn't get my RSI to behave the same. I was trying to get it to behave the same, but it was just a little too erratic, and I didn't think it made it a good example. So I'm going with the stochastics. I think it makes a slightly better example. But I'm sure there's other indicators out there too that can be used for kind of the same concept to kind of provide you with a long or a short bias situation. All right, so the next step is to fill in, basically I want this whole, let me use this no man's land object here. So I want to fill in this whole area with a long bias until we get this short trigger, right? And then I want to switch over to a short bias. All right. So what we're going to use is the toggle node. All right. Just trying to get these all squished together to make enough room here. All right. So with the toggle node, it seems that lately I've been using the toggle node with you guys. This has been a really handy Really handy function node. Now, when we kind of look at its default behavior, this looks kind of chaotic here. And it looks kind of chaotic because its default mode is in toggle mode, right? So when toggle mode, what it's doing is, let me just show the result. So on the long sides, if we're looking at the long sides only, it's gonna, so when it got to here, the long signal came in, it toggled on. Another long signal came in and it toggled off. Let me kind of mark this here. And I'll mark another one there. And so in toggle mode, right, so we're in toggle mode right here. We can see this long signal came in, it toggled on. Another long signal came in, it toggled off. Right, so it's just toggling on and off whenever a long signal comes in. But that's not what we want. When a long signal comes in, we want to force the toggle on until a short signal comes in, and then we want to force that long bias signal off, and then force the short signal on. So instead of toggle, we want to force it on, and then when let me stretch this out so we can see it. There we go. So now when an opposite signal, so since we were analyzing the long signals coming in, right? So the opposite of a long would be the short, right? So when a short signal comes in, we want to force it off. And voila, there we go. So there's the behavior that we want, right? So we got this cross down there, and there's our cross down. Here's another cross down. Yep. And that purple line looks like it's kind of fading away. Let me try and make that a little brighter. There we go. And we can see that this isn't a perfect system because we've got this short here, and what happened was, right, the stochastics wasn't able to get below the 20 to toggle along, right? And so the market, as you can see, price started trending up, trending up, trending up, until finally there was a big enough pullback that the stochastic was able to pull below the 20, and then finally we got our long bias here. Although I must say that it's not bad of a trade there, but of course, you know, we want to catch as much of the trend as possible, and so right, this uptrend here was marked as a short bias, so we kind of missed that. So back to, so this I've shown this before in a previous workshop. So what's going to be new in this workshop is using this no man's land here, so that we can, in case we're in an uptrend, we can turn off this short bias and go back to a long bias. So we want to find this inflection point here, which is in no man's land, and use that to go back to a long bias. me slide this over here. Okay. So what we have to do is we have two conditions going on here. So we have to build both of these conditions and join them together. So one condition is we can look at this inflection point, or we could look at the slope of the indicator and use the slope of the indicator. So let's see. Well, we'll take a look at both and kind of see what the pros and cons are of using the inflection solver or using the slope solver. We'll kind of go through the process of discovery here. So let me drop an inflection solver down, and I will drop a new slope solver down. And Hussam has a suggestion here. He's saying perhaps the slope of the moving average would do the trick. So, yep, you know, that's another possibility for sure. So we could use the slope of this moving average here. And so this here is an HMA 11, and the reason why that's on there was originally I was trying to get the RSI to do what I wanted, and I was smoothing the RSI out with the HMA, and so I wanted you guys to see the HMA that was being fed into the RSI. But I decided to abandon that and just go with the stochastics. So, because remember, these workshops are really not geared to teach you guys, you know, how to trade. These workshops are really geared to teach you concepts on how to use BloodHound. So if a great trading idea does come along, I do like sharing it with you guys, but at the same time, I don't want, when I meet with you guys, I don't want to share your guys' systems with everybody else unless you tell me that that's fine. All right, so back to building this inflection solver. All right, so I'll plug the indicator in. We'll switch it over to our stochastic real quick. All right, that was simple enough, right? Reverses up, we get a long signal, reverses down, we get a short. All right, so we got all these reversal points, and now we need to restrict all of these reversal points to when they occur within this no man's land here between 20 and 80. And to do that, we're going to use the threshold solver. And we'll plug the stochastics in. And we're using the D plot. All right, so now it's time to put in our threshold values. So I'm going to do 80 and 80. And now I have to have a value between 80 and 20. So I'm going to put 50. And then this is going to be our 20 and our 20. And now the reason why I put two 80s in here is because I'm not interested when the indicator is above 80. When it's greater than 80, I'm not interested in this area, so I don't want a output from the solver. And of course, when our indicator is below 20 over here, I'm not interested in this area. So when I'm at 80 or greater, I'm not interested in that area, so I'll just leave the output to 0. But when I'm at 80, I want an output. When I'm at 50, I want an output. And when I'm at 20, I want an output. So you can see right here that I'm getting my long output when the stochastic is between 80 and 20. Now right now I'm only getting a long output, and I need a short output as well because I don't know which direction the inflection solver is going to go. So I need both a long and a short there, like so. So now what this solver is doing is it's isolating my other solvers to this no man's land. All right, so you can see we're getting a long and a short when the stochastic is in this no man's land here. And so now if I join both of these solvers together with an AND node, it'll restrict all these inflection points to this solver's output, which is marking this no man's land. All right, so there's all of our inflection points everywhere. And now if I connect up this threshold solver, now we can see they're all restricted to between 80 and 20. So let me put a little description in here. So these are 20 to 80 stochastics. Okay, so now we can use these inflection points here to switch our bias around. And let's see here, I could, probably the simplest way, I think, is just to connect this condition into our OR node, into the OR node. So let's connect this in. And there we go. Yep. So let's take a look at it without this new condition. All right, so previously, let's see here. I'll create myself another box here. So this used to be all short. There we go, so that was all short. And now when we connect this in, there, we converted most of it to our long bias. So that works a lot better. All right, so next let's work on using the slope solver here in combination with our threshold solver. So let me connect this guy up. switch this over to the stochastic. All right, name this solver, and so there we go. Pretty simple enough. And stochastic is sloping up, and we get a long output. When it slopes down, short output. Okay, so now we need to constrain this slope condition to within our no man's land here, to within this area. All right, so I'm just going to build another condition. I'll just grab another AND node, and I'll connect our threshold in there, and then connect the slope into it. Right, so this is kind of a basic concept that is really handy that, you know, probably the first-time customer doesn't catch on to, right? And that is with this threshold solver. Let me connect this up here. So I'm going to revisit this again. So when we're in this, when our indicator's in this no man's land, we don't know whether we're going to be going long or short. All that we're using this indicator for is just marking that our indicator is within this bounds, you know, within this region. So that's why we need a long and a short. Is we just want to mark that our indicator is within this region. And so when you're within a region, within an area, you know, that doesn't tell you whether you should be long or short. It's the other condition of looking at the slope of the indicator or looking at the inflection point of the indicator that is telling us whether we should be, you know, whether we want a long or a short bias. So that's why this, excuse me, I'm losing my voice here. So since we're just using the threshold to mark this no man's land, it's not a, you know, this kind of condition is a non-directional type of condition, right? So it's our slope solver that is providing the directional bias. And so as soon as we connect one solver into the AND node, you can, you know, a solver that has a directional bias, you can see now that what comes out of the AND node is a directional bias now. But it's been isolated to this no man's land. So as soon as our indicator is above 80, then there's no output from that AND node. And right, so let's take a look. Let me get this disconnected here. So we'll take a look at our original system. And I'll connect this AND node in, and let's see what happens here. And we're getting the same results. So we're getting, you know, this is kind of demonstrating that with the function nodes and extra logic nodes, you know, there's enough tools now where there's kind of more than one way to you know, solve a particular condition like this. So there's not necessarily one correct way to do things anymore. It's become a lot simpler. Right? Yeah. So if we take a look at the rectangle here that I marked, which was predominantly all short bias, now it looks like it's predominantly a long bias. So that kind of improved the situation. All right, and I will post this BloodHound template file up with the workshop video. There. All right, so next, I'll move on and address Tony's question here. So I will need to get another chart put together. Let's see, that's a tick chart, and yeah, so let me use these two oil tick charts. Now let's see. All right, here's a 150 tick, and here's a 13-minute. All right, so let me switch this over to something a little shorter, a 5-minute here. I'm going to clean this off. And I'm going to create a simple crossover example to demonstrate this, to kind of help demonstrate Tony's issue here, what Tony's trying to accomplish. So let's see, what crossovers do I want? I'll use these two guys. Okay. Let's get rid of that, get rid of that. Make one of them red, so it's real obvious. Okay, so the white HMA is a 21 and the red is a 29. And right, so let me build a simple crossover solver. Okay, so this is an HMA 21 and 29 crossover. So here's a little shortcut key when you, if you just click in this indicator list, and if I hit the H key on my keyboard, you can see it jumps all the way down to the H's, and then I can just scroll with my wheel just once and the HMA pops up. A little shortcut there to get you all the way down to where you want. So like if I want to get all the way to the indicator, the Z's down there, I can just hit the Z key and it jumps you all the way down to the Z's. And that way I don't have to keep scrolling all the way with the mouse wheel. A little shortcut tip. Okay, so that's a 29 period. And okay, great. So we have our crossovers. And let's see, I should name this so I can load it on the 5-minute chart. All right, so I guess for the lack of a better term, I'll just give this a -B. So here, let's see. Yeah, what I'm going to do, so that way both of them are the same. Oops. Is I'm going to add another chart here. So this is kind of redundant on the tick chart, but you know, it'll make sense because I want to run in the same template on the 5-minute chart and on the 150-minute tick chart. Let me switch this over to ticks, 150. All right, so I'm going to move this down. All right, 50. Okay. Okay, great. So I can see my crossovers are still occurring in the same spot. So it looks pretty good. And let me change my color scheme here. I think it'll make the indicators, the HMA indicators a little easier to see when they're crossing over. Let's see, down bar. Okay, great. So now I just need to load this BloodHound template on the 5-minute chart, and then we'll be able to easily see what's going on here. Okay, great. So on the 5-minute chart, we have the same crossover, but it's on the 150 tick chart. And let's see, I want to make sure that I have my global crosshairs turned on. So here's the issue. So we have this cross down, and we have this cross up. And so if you look at the crosshairs over here on my 5-minute chart, right, you can see there's nothing being marked on the 5-minute chart. So let's take a look at this bar here. So this bar closes at 9:15, and this one's at 9:20. So let me put a little piece of text on here. Text is F12. Okay. Let's see, and I need to change. Okay, great. The color is white. Good. So I'm going to put 15. And then this one closes at 9:20. All right, so 15 means the bar closed at 9:15. This bar closed at 9:20. Now, I need to take a look at when the bar closed on the tick chart here. So I can see this bar closed at 9:15 and 35 seconds. So this bar where the crossover occurred, it closed I'm sorry, it closed 35 seconds after this 9:15 bar closed. Right? This bar closed at 9:15 exactly. This bar closed 35 seconds afterwards. Right? So basically, so this bar here, this 9:20 bar, was in the process of being built. Right? It was in the process of being built. And let me put a piece of text on here. So this was 15 minutes and 35 seconds. And so let me find the 9:20 bar on the tick chart here. All right, so it's this bar right here, and I should, yeah, I'm going to use a triangle marker here. Okay, so what I'm marking is I'm marking the tick bars that occurred within this 9:20 5-minute bar. And let's see. Oh, hold on. Let me see, my instruments are slightly different. Yeah, I've noticed that NinjaTrader's continuous contract doesn't always sync up correctly when you have a monthly contract. So let me put this in, okay, I'll switch this one to the monthly contract. All right, so let's get back over here. There we go. So what was happening was my the continuous contract that I had on this chart here wasn't back adjusted. So that's why my prices didn't sync up. So what I'm wanting to do is on this 9:20 bar, I'm going to mark the open and the close on the tick chart. And okay, so I need to change the time interesting. So I'm getting slightly different times here. So that bar actually closed on 15 minutes exactly. Okay, so now the white triangle here on the tick chart, you can see if you look at my crosshairs, if I move them up and down, so the top of the white triangle corresponds to the 5-minute chart, the top of the 5-minute chart bar, and if I move my crosshairs down, right, so you can see this white triangle mimics this 5-minute bar over here. And let's see. Actually, I need to back up. All right. So, shoot. Actually, actually this bar didn't apply anymore. So let me back up here, and I will have to mimic this 15, the 9:15 bar here. So let me redo this. There we go. All right, I'll copy my piece of text, and so this bar here. All right, so this bar closed at 10 minutes and 2 seconds. Okay, so our white triangle represents the 9:15 bar, 5-minute bar. The 9:15 5-minute bar. And so what happened is, you can see we got a cross up here, but it occurred 2 bars afterwards. So the 5-minute bar was still being built. So when the 5-minute bar closed, right on the tick chart, the 2 bars had already passed. So as we look on the tick chart, there is no cross up or cross down, right? So let me mark this with an arrow. And it'll probably help if I make the chart wider as well. There. That ought to be a lot easier to see. All right, so here's what's happening on this tick chart. We did get a cross up, but the timing is wrong. So let me mark the time on this bar that has the cross up. Right, it's 13:51. So this cross-up bar closed on 13 minutes and 51 seconds. And then 2 bars passed. Right, so we had 2 bars where there was no cross-up condition on the 150 tick chart. So therefore, when this bar closed, right, when the 5-minute bar closed at exactly 9:15 or 15 minutes, it looked to the tick chart and it looked at this bar and said, is there a cross-up on this bar? And of course there isn't, and there wasn't a cross-up for even the previous bar back. So that's where the issue lies. It's far more difficult to work on a higher time frame chart and look to a lower time frame charts to get things to synchronize. And you'll see that once in a while they do synchronize. Let's go find, okay, here's a cross up. Let's see, is it this cross up? Yeah, so it's this one. So let me go grab a piece of text and that was 4 minutes and 49 seconds. All right. 4 minutes and 49 seconds. mark this bar here on the 5-minute chart with the time. So it's the 5-minute bar, 9, so it's just 5 minutes. All right, so this bar closed at exactly on the 5-minute mark, on the 5-minute chart, of course. So now, as we look at what's going on the tick chart here, so we can see this bar closed at 4 minutes and 49 seconds. And this bar closed at 5 minutes and 26 seconds. So, so this bar was being built. So BloodHound was still, or I should say NinjaTrader was still referring back to this closed bar. Right? So if this bar was being built, let me mark it with, what's a good thing to mark it with? I'll use a dot. So this bar was still being built when the 5-minute bar had closed. Okay, this gets really tricky now. Let me there. Sometimes it's kind of difficult when you're using the global crosshairs. Right, so the bar that I marked with the green dot is being built. So it hasn't closed yet, so you don't get the data from the bar that hasn't closed yet. So it looks back to the bar that had closed, and this is where we're getting our data from. And there's a cross-up that occurred. So that's why it was able to get marked on the 5-minute chart. But what happened over here was this tick bar closed at exactly 15 minutes when the 5-minute bar closed. And so NinjaTrader grabbed the data from this tick bar that's marked with the arrow and said, nope, there's no cross up. There's no cross down, no cross up on this bar. And even if it looked back one bar, which it doesn't, it would still say, no, there's no cross up, no cross down. So that's the issues that you will encounter when you're putting BloodHound on a higher time frame chart and you're trying to look into a lower time frame chart. So it's always best, as best practice would be, to work on your lowest time frame chart and look up to the higher time frame charts. All right, well with that guys, I think that'll wrap up this workshop. And so I will give you guys an opportunity to pose your questions here, and I see a couple of good ones, a couple of good questions here coming in. So let me read, Tony put a comment in here before I started demonstrating this example. Tony had a comment in here, so he's saying, I'm not sure if I can qualify 450 ticks as higher time frame. Let's see, it could be lower time frame if market moves very fast. Yep, that's right. You know, but I guess but really the concept is that a 5-minute chart and a tick chart don't synchronize. You know, the tick chart is going to vary depending on volume. So in some instances, your tick chart could be a lower time frame chart, or it could become a higher time frame chart depending on how much volume is going through that instrument at any one time. So you know, so if you kind of have your tick chart kind of synchronized to be pretty close to, so when the bar closes at the same time as your 5-minute chart, then what's going to happen is your tick chart will become a lower time frame when there's high volume, and then it'll become a higher time frame chart when there's low volume. And so when there's low volume in your instrument, you know, your crossover signals will synchronize to your 5-minute chart, but only when there's low volume. that makes your tick chart a lower time frame chart. So I'm going to take a moment here to read some of these questions again. Yeah, so Julie brings up a good point. Welcome, Julie. I see that you're a new customer. So I feel free to, pose any kind of questions that you think would make this goes for everybody. If you have a good condition that you think would make a great workshop, please feel free to submit those questions to our support email, to our support forum. So I always prefer to take kind of customer questions and suggestions and demonstrate them in these workshops, because that way it's something practical that someone's using, and it's not so much theoretical anymore, but it's more practical to what you guys are actually using. And typically I find that when one customer is trying to do something, usually there's a handful of other customers trying to do the same thing, because there's only so many coaches out there, and there's only so many coaches out there, and they usually the coaches teach a handful of things, and so usually what applies to one person usually applies to a whole bunch of other people. So Julie's point was that once in a while they sync, and that's not very reliable. So yeah, definitely true. Okay, Gerard's got looks like a pretty good lengthy question here. So, are the following statements correct? All right, so for Raven, entry logic. If you are already in a position, your entry logic will trigger you into a new position in the same direction, okay, and close out your position if the signal is in the opposite direction. So yes, all right, so let me pull up Raven here and clear my throat at the same time. All right, so for those of you who aren't familiar with Raven yet, you'll see that there is, all right, obviously you have to load a BloodHound template into Raven, and then you have the option of using an entry logic and an exit logic. So this is what Gerard is saying. So if you have a specified entry logic here, then if we're looking at, well, we'll look at the 5-minute chart here. So let's just say we got this long signal here, and so Raven takes a long trade, and so then 2 bars go by, and then we get this short signal. So what would happen is Raven would reverse your position and put you short. But for example, you see that we have two bars here marked to go long. And excuse me, back here. All right, so we have 2 bars marking a long signal, right? A long entry signal. So Raven is going to put you long on the first one, and depending on how you have your strategy set up, Raven could put you into a second long position, but the default is to not enter the market twice. So Raven would enter the market on the first one, but the default settings are to ignore any long signals afterwards, as long as you're still long, as long as your position is open then Raven will not take any more long trades. And that setting is controlled here. And so this is a NinjaTrader feature. This is, this is NinjaTrader that basically it's everything below the general section here. These are all NinjaTrader settings. All right, so all of these settings, this information is available from the NinjaTrader help documentation. So what you could do is, just hit F1 if you're trying to figure out what some of these settings do. All right, you can hit F1 and you can see it opened up with working with automated strategies. So it took you right to the right section, and then you can kind of go through this and read up on what all of these individual parameters do for a strategy. So these aren't specific to Raven. All of these parameters here for all of these sections are specific to any NinjaTrader strategy. So this is the default settings where entries per direction is set to 1 and entry handling is set to all entries. So regardless, with these two set to set as such, then when we get this long signal here on the 5-minute chart, you'll be put long once, and essentially NinjaTrader would ignore the second long signal here. However, when you do get to the short signal, Raven would reverse you. So it would close out your long position and it would put you short. Jeremy did recently add a new feature here, so enter only when flat. So what that would do is if this was set to true, then if your long position was not exited, if you were still long, then Raven would not reverse you short if this setting here was set to true. So, all right, so let me continue on with Gerard's question here. All right. Well, I'll just read the question over. It looks like one long continuous sentence. So, all right. So, if you are already in a position, your entry logic will trigger you into a new position in the same direction and close out your position if the signal is in the opposite direction. So that would be true. Contracts being equal, partial, close out if not. Let's see. Oh, okay. So I think I understand what you're saying. So Gerard has in parentheses contracts being equal, partial, partial closeout if not. So NinjaTrader basically manages the execution of the trades. So if you, once again, you can go into the help documentation and look up exactly how NinjaTrader handles the back end, but I think what Gerard is getting at, so say that we went long, and say you have a stop down here that stops you out of, say like we went long 2 positions, and so you have 2 stop levels. I can't draw anything because I have this strategy up. Well, let me close this. So let's just say you have a oh, come on. Let's just say you have a stop here for one position, and you have a stop down here for another position. So this stop didn't get hit. So you have a partial contract remaining. Right, so you submitted two long orders. one long order got closed out by your stop and you're still long the second order, and so regardless of how many positions you're long, Raven would close out all open positions, right? So NinjaTrader manages the back end, and NinjaTrader knows how many positions are still open long, regardless of how many stops might have been hit, or regardless of whether you added on to your positions. NinjaTrader tracks how many positions are open, which it receives back from your broker when a position has been opened. And when it gets this short signal, it will close all of the open long positions and put you short. All right. So so the second half of Gerard's question is exit logic. If you are in a position, it takes you out, flattens all. Correct. If you are not in a position, it does nothing. Correct. So let me bring Raven back up. So this exit logic, it only exits your positions. It's not an entry logic. So only the entry logic will open a position. The exit logic only closes a position. So the exit logic cannot reverse your position, and it will not open or enter. It only closes out positions. So there, we were hoping that the names would make it clear, but when you're trading real cash, it's always best to make sure. All right, so Gerard, I hope that answers your question thoroughly. All right, so Tony. Tony's got a comment here. If I make on bar close to false, will it cure anything? Okay, yeah, so back to Tony's issue, trying to synchronize the 5-minute bars with tick bars. And yes, Tony, if you set this feature, so let me open up the indicators window here. And so this feature here, this setting, so once again, this is a NinjaTrader setting. So this calculate on bar close applies to all indicators. And this is also available in strategies. So if you set this, so right now the default is true. So what that says is that NinjaTrader calculates when the bar closes. So once the bar closes, the indicator is calculated when that bar closes. And so any open bar, any bar that's open and still building, NinjaTrader doesn't do any data, doesn't do any calculations with that bar that is in the process of being built. Now if you set this to false, then what happens is NinjaTrader would work on the current bar that's being built. And so effectively, if this was set to false, then all right, I'm going to put this to true. Then when you get a crossover signal from your tick chart, that would be sent over immediately to the 5-minute chart, and yes, you would get a crossover signal on your 5-minute chart. However, that opens up a can of worms. So just be forewarned that when you use calculate on bar close to false, it's been my experience that you start getting a lot of false signals. So just be aware of that, Tony. It does open up a whole can of worms and a whole new thinking process. So, but it's good to play around with it. It's good to experience it. So you have that. So you've gained that experience to see what happens. So, Let's see. All right. So Michael, it looks like he has a comment here. The 450 ticks are relative sometimes in the evening. The tick bar can equal to a 10 to 30 minute bar. Yep. Yep. Very true. All right. So, okay. Oh, Tony, let's see. Right, so Tony says, can I convey this tick chart signal and hold it somewhere so the 5-minute can see it? Yeah, I figured that somebody was going to have that as their follow-up. Well, so back to the calculate on bar close. There may be a roundabout, there may be, a quote hack to do that, so that as a 5-minute bar is building, all right, so let me kind of go back to this bar example here. So back to this example. I posed this as a question to Jeremy to come up with a new, I guess actually be, I'm not sure if it'd be a function node. It would probably have to be a function node and not a solver, where so when you're working with lower time frames, that if a signal, like this long signal occurred, that you could hold on to this long signal for however many bars are necessary until until the 5-minute bar closed. And then once that, right, so you could hold on to this long crossover signal until the 5-minute bar closed and basically send this long signal over to the 5-minute bar, and then you would release that data. So I did pose that to Jeremy, and we'll have to kind of talk about this and see what we can do on the back end of the programming. I think it's possible. I think there is a chance. But I don't know for sure. We'll look into that, because that would be a really neat feature to have. So. Okay. Well, I hope I pronounced your name correctly, Victorino. Let's see, saying, hi Zach, can you please explain the rules to trade the Renko chart you give example earlier? Yeah, Vito, we're not a trading room. We're not coaches. We don't teach people how to trade. And that was just simply theory. It was just a conditional example that you might want to use, it's not really an example. It was not a suggestion to use this in your trading. It's just an example of how to build conditions within BloodHound. So I know that some coaches do kind of teach that system, where, a lot of coaches and a lot of traders have, various indicators that kind of give them like a long bias and a short bias. And, and so that's those biases, they want to implement that into BloodHound. So that way you wouldn't take any long trades when you're in this short bias, right? You'd only take short trades when you're in this short bias. And, this bias is flipping back and forth a whole lot. Typically you would probably work with a higher time frame, so that way you would get a continuous short bias. So this probably may not be a good example here, because it's switching from long to short pretty quickly, but it might work great for scalpers. This is probably a good kind of bias condition for scalpers who are just trying to look, just trying to get one bar, a 1 bar tick or I'm sorry, a 1 bar scalp out of it. So for scalpers, this might work great, but for a longer term trader, you might need to use a longer period stochastic or something like that. So this is not a trading idea. It's just a concept of how to implement this style of a bias condition into BloodHound. All right, let me get to some few more questions here. All right. All right, so this looks like Tony just has a comment here. All right, great, Tony. I'm glad this kind of cleared things up for you. All right. So Husum, let's see, Husum has a question. How can I get the exit logic to close an existing position only and not to reverse the position? All right. Okay, so Husum, I'm assuming that you probably caught on to when we were talking about Raven earlier and the differences between the exit logic and entry logic. Okay, great. So I guess I answered your question. Simply using the exit logic here will close your position, but it will not open, it does not open a new position. So entry logics only open a new position. And so of course if you're, in this, if you're long from these long signals and then all of a sudden you get a short signal, obviously in order to open a short position you have to close out the long positions, and so NinjaTrader manages all that on the back end automatically. And so if you get an entry signal that basically is the opposite or reverses you, then NinjaTrader manages closing out all the existing open positions. And so the exit logic basically will just put you, essentially it'll put you flat. And that's what its purpose is. All right. So, okay, great. And it looks like Randy's got a question here. You may want to hold, or a statement here, you may want to hold off on the hold function and until NT8 comes out. Yeah, right, which is supposed to at least partially address this type of issue. Yeah, that's true, Randy. So we do have to consider what new features are going to be built into NinjaTrader 8, right? Which might accomplish this all for us. Hopefully they do. It sounds like they're going to make some great improvements with synchronizing different charts. So, and making it make it easier for coders like as ourselves, to synchronize chart data from different charts. So, yep, that's a good point, Randy. Thank you. All right, well, with that, guys.